Good morning and welcome. We'll just wait a moment for participants to be joining and we'll get started in a moment or two. Excellent. Well, allow me to introduce myself. Kathy Stairs here, and I join you from Provenir and have the privilege of moderating this webinar here today on digital finance and the movement towards open banking. So as digital finance continues to evolve, the moving towards open banking is reshaping the financial services industry. And this advancement brings opportunities and challenges, specifically in fraud prevention. And today we're talking to two panelists to explore how organizations can thrive in this rapidly changing environment. So join me in welcoming Sophia Eria from Provenir and Eddie Bakey from Flinks. So Sophia, why don't you take a moment to introduce yourself?
Yeah, great. Thanks, Kathy. So I'm Sophia and I head up fraud solutions at Provenir. I've spent about 16 years or so in the world of fraud and financial crime. So I've seen it change over the years. New threats come through as well as new technologies. And I'm really delighted to spend some time today talking about some of the interesting topics that we have on the table.
Excellent. And Eddie?
Hi, everybody. Eddie Bakey from Flinks. I head up our revenue team. Been with Flinks for about 5 years, and prior to that, with multiple different fintechs. I'm certainly not the fraud expert on the panel, which is great that we have Sophia. But looking forward to talking about kind of data and how open banking data and alternative data can really shape, your best practices, as well as how to fight and combat fraud with Sophia and Kathy today.
Excellent. Well, I thought I'd start us off talking a little bit about the Canadian economic landscape and how it plays a role in shaping the fraud trends within financial services. Factors such as inflation, rising interest rates, and an increasingly digital economy have led to both heightened fraud risk and evolving fraud prevention strategies. So what we've seen is a few economic factors driving fraud in Canada here. One being the rising cost of living and increased correlation to fraud attempts. So inflation remains high, putting financial pressure on individuals and increasing fraud risks such as identity theft, application fraud, synthetic identities. We're seeing as a result of that, interest rate hikes have been happening, and that equates to higher borrowing risk. So the Bank of Canada's interest rate have led to increased delinquencies. And we saw even in credit card delinquencies rise by about 11.4%, I think is the stat I saw year over year of Q4 and 23. So that leads to more first party fraud cases as an example. And we still continue to obviously see the digital transformation and cyber fraud growth. With the prevalence of digital banking, there's a skyrocketing in some aspects of cyber fraud. Account takeover grew by a significant number in 2023. I saw up to as high as 55%, with fraudsters exploiting things like phishing, credit stuffing attacks, and fraud losses on payments continues to rise significantly. So one of the things I think we'll hear a little bit about today is how financial services are addressing these fraud risks. And I think it's a combination between AI and data, like open banking data. So, starting to use AI and machine learning and fraud prevention, I think is something that's key to mitigating some of these. Using real-time, decisioning platforms and data can help reduce by a significant amount. Identity verification and marrying that with behavioral analytics. So we've seen an increase, as an example, in the marketplace in the use of biometric authentication, using those types of technologies, using other types of data. Open banking data is coming. What's that impact going to be? We'll hear from Eddie a little bit on that. But increasing investments in KYC, AML, related compliance have significantly increased inside of Canadian financial institutions. I think you've also seen, outside of what this webinar is going to talk about, but also seen a collaboration in fraud data sharing and consortium and those types of tools that are available to to the Canadian landscape. So I think, you know, fraud continues to grow in complexity as economic pressures rise. Financial institutions must stay ahead with real-time AI-driven risk decisioning and alternative and data such as open banking data to mitigate against these frauds. So I thought we'd start off with that little back set of what's happening in the Canadian landscape and how those economic trends are driving fraud and how we can best address them. But maybe a poll to the audience before we get kicked off to answer the question, what do you think is the most prevalent type of fraud facing financial institutions today? So you see a pop-up on your screen there if you want to just take a toll down there, and we'll address that in a minute. But why don't we start off, Sophia, with sorry, I've got this completely in front of me now. Why don't we start off with AI and how AI is transforming fraud? So both from a prevention and an exploitation, can you share some real world examples of how AI is enabling fraudsters and how businesses can counteract this?
Yeah, absolutely, Kathy. And I think it's really interesting what you were talking about in terms of the economic background, because I think whenever we see constraints and stress in the economy, that does have a direct correlation to the increase in fraud types, fraud innovation, and just like the volume of kind of attacks that are happening across the board from first party through to third party. So really interesting background there. And I think in the last sort of 2.5 years or so, there's also been a big paradigm shift in terms of technology innovation, specifically generative AI, which is a type of artificial intelligence that can be used to create text, images, voice, video, any sort of like artifacts can be produced out of that. And what's unique about this is it really is a shift in terms of its capability, but also because it's suddenly very accessible to anyone with an internet connection. It means that any opportunistic bad actors or more organized fraudsters can get access to image generation technology, voice cloning tools, and also video deepfakes. And in the past, you'd need to have quite a lot of technical experience and know-how in order to create these types of artifacts and materials. But now fraudsters don't need any advanced technical skills and can create impressive fake materials for deception. So I thought it might be interesting to have a look at an example. So I'm just going to share a little video here. Let me know if you can see the screen. It won't have anything on it yet, just a blank screen.
We can.
Okay, great. So I'll talk over this. So basically, what we are seeing here is a tool which you can get access to via the dark web. That's what I've been told anyway. And what you can do here is a criminal can basically upload a headshot. So this particular image is actually an AI generated image. So it's a completely fake person. They don't exist. And then they can go to this drop down option and select a template of an ID card. In this case, they're looking for passport card templates, and they select Australia in this example. And what it's going to do is it's going to allow the user to then either generate identity information. So in this case, they've generated synthetic identity information using the tool. But you could also, if you have got hold of someone's identity information, you could also use that and type it in. And what it would do is it would combine the two together to create this AI generated version of a passport. But what if you zoom in when it will show us in a second, what's really scary is that when you zoom in, it's actually a really high resolution, and it's got all of the templates, the symbols, the overlays, the holograms, all of that embedded into the image. So it becomes really hard to detect what is a fake and what is a real image from a photograph. So next, what's happening is we're then taking that AI generated image, and the user has the option. So this then goes on to help the user, in this case the fraudster, to create a new account. So goes through the KYC steps for a crypto account. In this case it's Bybit, so that's the account they want to set up. Now it's going to take that image and create the selfie requirements for the KYC process that Bybit would like. So in this case, it's the looking left, looking right, as part of that selfie requirements. And I guess what's really scary there is like how realistic that looked. For me, that looked pretty good. It goes on, there's some more steps, but we'll pause there. It goes on to kind of complete the KYC process there and automatically open an account. So I thought that was pretty impressive and scary at the same time. I'm not
It
sure
absolutely is
what
both.
you guys
So
think.
it absolutely is both, and begs the question, so what do we do to mitigate that? How can businesses counteract some of what AI is enabling fraudsters to do?
Yeah, so look, in all of these kind of technology advancements and fraud advancements, there's always going to be the opportunity for the fraudster, and then the technology opportunity for businesses, for financial services, to come right back at fraudsters and put in place checks and measures to support the process and to make sure that these don't get through. So as well as the existing checks that are available, and I would highly recommend that you review your onboarding process around that. So you want to make sure you're doing validation and verification on individuals' identities, and calling out to third-party data sources so you can triangulate some of that data to validate it. Also, there are very sophisticated vendors out there to look at ID documents as well. But what we want to do is step that up in this particular example, because we know that we might be experiencing an increase in AI generated documents. We need to be more innovative, and we need to look for signs that maybe this isn't a physical document. How does the reflections fall? What are the shadows on the images? And how does that compare to a real physical document? And we can even use some generative AI techniques, some of the LLMs models that have been produced, to look at similarities between documents over time, to look for patterns. So that could also be an opportunity for businesses to identify that maybe they've seen that image being used before, or also that template being used before, that hasn't changed over the kind of year to 2 year cycle that governments issue new document templates. So we'll want to use this technology, be more innovative, and step it up in terms of the kind of techniques that we want to look at. And in terms of the video selfie, just to round that off, we need to look at more sophisticated techniques. For example, was there any injection attack, presentation attacks, and other image processing type techniques? Again, generative AI could help with this. There are some interesting prototypes out there to support some of these fake selfie risks. So yeah.
Right. Well, let's see what types of risks our frauds are facing our audience today, and get a result of the polls that we can comment on. So pretty spread evenly with the top scam payments and the identity theft synthetic ID, which is exactly what we're talking about. Does any of this surprise you, Sophia or Eddie?
No, I mean, you know, if you look at the stats, the highest area in terms of prevalent fraud is around scams. That's the thing that is kind of has been on the increase, and also has the biggest sort of um, I guess, change in terms of their approaches. So, for example, we've been hearing a lot more around the developments around social engineering. So before, a fraudster would kind of call you up and imitate whatever, you know, whoever they wanted to be, your child, your CEO. But now they can use voice cloning. So, you know, you are going to be duped by that. There's no way you're going to be able to tell the difference there. But similarly with copying kind of email styles as well. So you can clone someone's persona in terms of their email writing style, makes it very hard to distinguish. So I think scams for me is the one that's definitely up there. But also we have seen an increase in identity theft as well.
Right.
Yeah, I would echo that, and I think we see a lot of fake documents come through Flinks's platform, and you know we have AI and fraud to prevent that. But from what we're seeing in the market is moving that identity piece up the flow in you know the consumer interaction, and putting that at the beginning. If you can identify fraud at the very beginning through the you know the identity of that said person, you're going to be able to catch a lot more than having them you know do that later down the line. I know we've talked about this at nauseum on a few different panels. So seeing
Right.
identity that you know that prevalent, my suggestion is just to move it up to the beginning of your flow.
And what do you think the is needed to really separate then the real fraud signals from the noise in when you're looking at onboarding as an example, and moving that fraud up to the earlier parts of the onboarding cycle?
I would look at this from kind of three different approaches. One is like really understanding the why behind you know those fraud signals or what they are. I think traditionally in AI, we've kind of existed in a black box where something is fraudulent or it's not. And so you really need to understand what those key factors are behind kind of why those flags are being put up. I know for Flinks, for example, we used a fraud platform and we kept getting a lot of false positives.
Mm.
Consistently, and we didn't know why. And so we went back and worked with that vendor to understand, you know, what was actually happening in the background to produce those flags. So I think whatever vendor you choose is really digging into the data and understanding at a transactional level, why was this flagged? Why wasn't this flagged? They look similar. And then you can kind of teach your own, you know, machine learning and AI models to kind of fight that from that perspective. The second place, I think, and you'll hear a lot about this today, I'm sure, especially for me, is kind of the behavioral analytics. So understanding, you know, how customers are actually moving about through biometrics. This is actually a great tool because you don't actually have to have the user doing anything, like providing consent for open banking data or providing consent for their ID or uploading anything. It's just happening in the background. So understanding, you know, their mouse movements, how they're typing, the speeds, making sure that it's consistent or inconsistent, and being able to kind of track those, I think is you know one of the biggest things we're seeing today. And then lastly, and we've talked about this a lot as well, but kind of sharing fraud data across multiple, whether it's
Right.
fintech, banks. I know MasterCard has, you know, an AI fraud network that they have today where you can kind of share data. So if you have a stolen identity that was found on one network, that's kind of gets shared across banks and fintechs that opt in, and those members get you know alerted, and so this is kind of resulting in preventing more repeat fraud across multiple institutions from the exact same person. So you know those are my three kind of tips: is understanding the fraud and the why behind it, or at least the reasoning. Secondly, using biometrics like on every single piece of your application. And third, sharing data, whether it's you know internally within your organization, but more importantly, across the industry.
Yeah, and I think that you know what that leads to, I think great way to look at it is the need for customer balance, right? So when we're looking at, you know, these are all the tools that we can do to help mitigate fraud from a customer standpoint. You know, I think this has been talked to quite a bit in the marketplace and on various panels and webinars, but it's really, businesses want to prevent fraud, but the consumer continually expects to have fast, seamless digital experiences. And what have we learned, or what secrets do we have now in place, as financial services institutions, as an example, to strike that balance in these competing priorities? What are your thoughts, Sophia?
Yeah, so I think, getting this balance right is really difficult to achieve. It's a very delicate balance between the fraud defenses and the customer experience.
Mhm.
And what we're seeing in the market is, from a financial services perspective, is a trend to want to make the process much more dynamic and also relative to the risk. So not necessarily putting every single customer down the same route, depending on who they are, what information you've got about them, and also what products and services they're taking from you. And also, there's been like an expectation that with the technology improvements, that the fraud checks will sort of operate behind the scenes in more of a stealth mode. And now we can actually support a lot of that. So, all the third party calls can go off, we'll come back in seconds. We can make decisions really quickly, whereas in the past, a lot of it would kind of go offline. It might even go into a batch mode for a while, and then, might have an investigator looking at it. But actually now, with all of the opportunity to have these different APIs connected together, and also open banking, you can make really strong decisions very quickly, and then only send through the ones that maybe either you don't have the data for, or maybe seem a little bit risky to another routing. So I guess I don't know if it's necessarily secrets. I think it's more logic. But I guess
Yeah.
from when you're sort of thinking about your fraud strategy and your platforms that you're selecting, I think making sure you've got a very flexible platform which will allow you to change out the different types of fraud services, data that you might want over a period of time, will allow you to select the best of breed of those vendors as well. Fraud's always changing, especially identity fraud, that is always continuously changing. So, one day we might have a specific way to detect deep fakes, and the next day there might be another way. So, having a platform where you can swap in and out different vendors, and depending on what product, services, countries, regions, all of that kind of stuff. The second area is thinking about your workflows, and you can go a bit over the top with segmentation, but kind of thinking about your workflows and segmenting your customer base depending on their risk, but also having the option to have dynamic workflows, so you can route those customers depending on what's happened even in the previous steps of those workflows. So it's kind of a dynamic live system. And I think the last of area is really thinking about using technology to be able to tune and optimize. So in the past, and what I've seen over the last 15 years or so, is we'll have huge teams within like retail banks and digital banks who will be focused on optimizing and tuning the rules and the models. That's a huge amount of work. Obviously, you do always need human at the end of it to make a decision, but we can use technology now to help to optimize and tune these fraud strategies, and to maybe provide suggestions, and to keep you really high performant on your fraud detection, and therefore reduce your false positives. And that's going to therefore result in a better customer service for your end users.
Yeah,
And I think that oh, go ahead, Eddie.
Oh, I was just going to add on that I think the highlight that I would take from that, Sophia, from what you said, is the workflows aren't binary. So it doesn't mean every single person needs to go through the exact same, and it needs to be dynamic. I think too many people today and too many businesses put every single person through the exact same onboarding experience or loan application. And so you're actually routing a lot of manual work based on flags that you might see that you could actually root out later down the process. And vice versa. At the same time, you might be letting people in without actually vetting them further down. So for me, that binary piece is huge.
Yeah,
And I
absolutely.
think too, using using analytics, and you mentioned behavioral analytics a minute ago, we'll get to that, Eddie, but also using the optimization that's available to you with machine learning and other AI tools to really crunch down and look for patterns and help with segmentation in real time, which just yields to faster results at the end of it. So I think that it's a combination of all of that, but what is key to it and is critical is data, and data from a variety of sources. So we've talked a lot about alternative data over the last couple of years. We're in a, data overload now, maybe you could say, an era of that. There's more information available to us than there ever has been before. So what's the best approach for companies to extract meaningful insights from all of this data without slowing down that process, Eddie?
Yeah, I think when you look at data and kind of in your application flow, I look at it from, two different perspectives. One is, what does the user have to do to provide you that data? And then the second piece is, what can you be doing as an organization to obtain that data while they're going through your flow? And so when you look at like a traditional onboarding experience, obviously you have your ID verification, hopefully at the front. So that's, user generated. Generally, then they'll do like a soft or hard credit pull. So you'll have your credit or financial data next, whether that's bureau data, cash flow data from your bank, payroll data. We're seeing a lot of like employment verification now, direct to payroll providers. Some companies even go as far as getting behavioral and transactional data. So you can think about rent or utility payments, bill payments, so coming directly from your telecoms. Depending on what your use case is, I know for the SMB lending space, a lot are looked at like purchase history, returns, seller ratings for these e-commerce platforms. So that is kind of all in the user-generated, user-driven side of the house. And I think depending on your use case, depending on what you are looking to provide to the end user, you'll take a variety of kind of those different pieces of data. What I think is interesting, and going back to the biometrics or what can be happening in the background, is looking at how fast the typing is, what the mouse movements are. That's all kind of on the biometric side. But the piece that interests me, kind of, and our customers and what we're hearing is alternative data sources that are publicly available. So, with AI scraping today, you're able to kind of go out and scrape whether it's government registries or business licenses or business registration data online. So if you have a tool that allows you to, I'm just going to use an example. Let's say a small business is applying for a small business loan. If I'm the lender, I want to know that this business is registered in the province or state that they're applying in. I want to make sure that they haven't had any lawsuits or bankruptcies. Obviously those indicate significant risk. And then you can also pull things such as customer reviews or web traffic. That can all be done in the background using a scraping engine once you know what that business is. So tsunami of data for sure, but I think understanding what you actually need the end user to provide versus what can take place at the same time in the background and running at the same time makes for a seamless customer experience. I'll add one of our customers, they wanted to look up the US death registry for when someone was applying for a loan, because thinking about synthetic IDs and deep fakes, you need to make sure that this person applying for a loan is alive. And so you're actually able to do that using a web scraper. And that's an alternative data source that a lot of people wouldn't check. But in this case, it's public information. It's not challenging to obtain anymore. And it's just one more mechanism in which you can kind of prevent fraud in your platform. So kind of the takeaway for me there is think about the data that you need the user to provide versus the data that can be provided simultaneously in the background.
Right. And I think pulling all of that data together, is key in a mitigation strategy. And I think Sophia mentioned that a little bit earlier when she was going through the ways to mitigate, the different types of frauds that are there. So I think that's, very much aligned with what we've been discussing. Open banking is regulation soon to be released. So I think that may have a little bit of a change of how we're able to use the data and how we're able to mitigate fraud. But I thought we'd go with our second poll here before we talk a little bit about open banking and how it's going to change the financial landscape. So the poll question, with the Canadian open banking regulation soon to be released, what aspect of are you most eager to leverage for your business? And there's a 4 choices there, and we'll come back to this poll in just a moment. But, following on, Eddie, the open banking is expected to change how financial data is shared, but there are concerns about how it might benefit large fintechs over smaller players. What's your take on this potential market shift, and what should businesses do to stay competitive with this data?
Yeah, I think first of all, we've been talking about open banking in Canada for a very long time. So we'll see what happens. Speaking of economic factors and what
Yes.
is planning. I'm actually really excited to see the results of this poll because a lot of the customers we talked to today don't have trouble getting the data. You can use a data provider such as Flinks or others that are actually screen scraping pretty well today. And we have certain deals with the banks and certain OAuth connections that are already available that are leading the way. So I don't expect the data actually coming from the bank to be the number one thing that customers are looking for. I think when we kind of look at larger fintechs having an advantage, a competitive advantage, we would look at the regulation rules, and under the accreditation criteria that has been announced by the Canadian government, it really benefits those larger players. And so that really doesn't level the playing field for smaller fintechs that are providing services that customers still want to use.
Right.
So for me, it's like, if you're a smaller fintech, I think the thing is you need to focus on a specialization. So you need to be very hyper targeted in your services rather than kind of a broad financial solution. So for example, your Wealthsimple is going to compete, at the highest level with the banks that are today or Questrade. But you might have a neo broker or a small investment platform that specializes in, maybe it's ETFs, and maybe that's their and that's their focus. And so I would say kind of dive into what you can make as your specialization, and then use that data to kind of become a differentiator, and how you utilize that data. Again, going back to what I was talking about earlier, you have multiple sources of it. So you can get your bank data, open through your financial institution, but you still have the opportunity to scrape the remainder data. I think the other piece here that's huge, and we're already seeing it start to take place, is kind of ecosystem partnerships. So if you're a commercial bank and you want to get your data for your customers to a accounting platform or an ERP platform, how are you going about doing that? And how do you create a competitive advantage for you as an organization? If I'm a small business owner, I don't want to be dealing with my tax or my accounting or my bookkeeping. I want that all to flow automatically on a daily basis so that I don't have to worry about it. And so I think from that perspective, it's how are these financial institutions creating these partnerships / building that ecosystem within kind of their niche.
Right. And Sophia, you've seen this a little bit play out from a global perspective in other areas where open banking data is used in and has been for quite some time. So do you see any differences or things that we can look forward to in the Canadian marketplace, maybe with how open banking is helping to change how data is shared, but also how it aligns to mitigating fraud?
Yeah, absolutely. So I think open banking really gives us an opportunity to kind of step up the information you can understand about that individual. And as Eddie referenced, what we're seeing in Europe is kind of a shift from, kind of in the past, maybe verifying pieces of information using physical documents, so like a proof of utility bill or council tax bill, that kind of thing, shifting to hooking into these kind of APIs that have been set up either directly into your bank direct debit. Now, I don't know if you guys have direct debit over in Canada, but it would be like the monthly payment for those utilities. And that can verify that you are an account holder at that electricity provider, for example. Or even we're seeing those providers actually creating API interfaces direct to their database. So that's been also really interesting, and also sort of cuts out this document forgery situation that we had a lot of in Europe. So yeah, I'm seeing that sort of filter through now. So it's kind of, I think it creates an opportunity to be, again, a bit more innovative and to kind of park some of the older ways, the older processes that we had that now probably don't serve us very well in terms of validating and verifying in individuals and their established kind of accounts and details within the financial sector. So yeah, I think hugely positive. Doesn't come without quite a lot of consideration though. So I remember, you know, the few years of upheaval in terms of trying to get all the financial institutions to agree to the PSD2 regulations, the standard, and then the panic around kind of making sure they could map to all of that and could actually deliver on time. But I think we've come out the other side of that now, and we're starting to see a lot more kind of creativity around how we can use that data. And to be honest, it's kind of been quite seamless. So I can just kind of download one app and I can link up all of my different bank accounts into one app. Now I don't have to like log into each one. It's really good for kind of switching accounts or switching products. So yeah, it's kind of it's been quite seamless after that sort of technology upheaval part.
Right. Well, let's see the results of the poll and we can take a comment on where. So more than half, there you go, faster, more accurate identity and income verification for lending and financial services. And I think that, Sophia, is exactly what you just outlined as what you're seeing over in Europe. And I don't know if you were excited to see that, Eddie. Any comments on what came out as the number one in that poll response?
I think the faster part makes a lot of sense.
Yeah.
Obviously, the screen scraping still takes time. I think the ability for end users to connect and own their data. I think that's the biggest piece. And Sophia, I think you touched on it, but you being able to log into your bank and see what apps you've consented to access your financial data today is such an advantage, right? Like we're flying blind here still in Canada. I could connect my app with or my bank with Simple. I could connect it with a loan. I could connect it with a mortgage, and I have no idea what's going on with my data after I've kind of transferred that initially. So I think that, even from a fraud perspective, if you see a app on your online banking that you didn't connect to, you can easily withdraw consent and file a complaint and kind of go down that road. Whereas today it's just not available. So I totally get the faster side of the things. I think from a income verification perspective, like it exists today, but speed is the number one complaint that we hear.
Right. And with some changes there in use for fraud detection or how it may impact, but there are some regulatory shifts that are happening, like the end of screen scraping by 2026, and that'll force us to businesses to rethink their fraud prevention strategies. How do you see these changes impacting fraud detection in the coming years, Eddie?
I first of all think that we won't see an end to screen scraping by the end of 2026. I think it'll be a slow death for screen scraping. And I say
Right.
that, like Sophia said, you have a lot of financial institutions that need to buy in and actually do the work to build their APIs and open them up. We're already almost, halfway through 2025. To think that that's going to happen in the next 18 months, I think is a bit far-fetched. But I do believe that screen scraping will, be eliminated one day because data quality, security, and the ability for the consumers to consent to where their data is being shared I think from a fraud perspective, you're going to see fraudsters need to change their ways of kind of, utilizing said data. So today, you can go on the dark web and get credentials very easily with bank credentials, implement them. But like I said, if I get a notification every time my bank is linked with a new app, all of a sudden, those credentials aren't as powerful as they once were. So I think that'll eliminate that side of the credential fraud, but they will shift their tactics to, kind of more API based verification frauds, and they'll pivot. They're usually one step ahead of us. So I think that just goes back to the point around the increased need for behavioral and AI based detection that is seamlessly running in the background. So the last point I will make is kind of on the regulatory pressure for stronger security. I think with open banking, we will get that sense of stronger security. It's just how the government kind of takes the next steps to stop fraudsters and what those penalties include. I think traditionally, fraud under $5,000 is not as, penalized, at least in Canada, as I believe it should be, or others do. And so how are the regulatory framework for building open banking going to comply with the regulatory framework for kind of stopping this fraud, and what are we going to be doing about those criminals?
Right. So looking ahead as we're sort of rounding out, want to leave some time for some questions if there are any. What's one piece of advice you'd give financial institutions trying to future-proof their fraud prevention strategies in an AI and open data-driven world, Sophia?
Yeah, so I think I'm not going to be able to do it in one. I think I've got like a multifaceted approach, which is how I like to look at it. So I think the first area is to make sure that within the financial institution, they have developed their AI expertise. So make sure they've got teams who have skills to be able to take the opportunity that is presented here with all of the new technology shift and look at innovation within the business, not only on fraud prevention, but also how to optimize and use that technology within the business to become more efficient. I think the other thing which is often overlooked is collaborating with other people within the fraud and financial crime network and sharing ideas and innovation, and also fraud alerts and data as well, but definitely innovation, best practice with other institutions, and also staying in touch with the regulatory body. So as these new technologies come out, how do we make sure that we're also compliant from the regulatory perspective? And I think the other thing, and we've seen a huge push for this in the UK, is educating customers on the types of threats. You need to sort of raise awareness in terms of the types of things that they might be experiencing, what to look out for, and what to do about it as well, so that they can protect themselves, because otherwise all of the work is on the financial institution, and that's a lot of pressure. If we can educate the public so they can be more aware, they can help each other, I think that's a great way to go. And I have seen that in the UK. That's been a huge push from our government.
And what are your ending thoughts, Eddie, looking ahead?
I echo what Sophia said, and I think the only thing I would kind of double down on and reiterate is it's not a one size fits all approach, and it's going to be unique to each institution on your fraud strategy. I think going back to having a dynamic onboarding experience or application experience is crucial. Consumers expect speed, and they deserve speed. So your job, as a financial institution or fintech, is to enable speed while also reducing that risk. The tools are there today to leverage, and so I think obviously Provenir has an amazing marketplace, as does Flinks. So I think it's making sure you understand your fraud indicators, your fraud risk, and then leveraging the tools that are available to kind of service you best.
Great. Well, listen, great interaction and conversation. I want to thank you both for joining the panel today and for this exciting topic, and for all of those that attended. Thanks for your time, and enjoy the rest of your day.
Thank you both.
Thank you.
Bye-bye.